Let's talk some more right now about what's ahead for commercial REITs in 2011 and get the smart plays in that sector. Joining us is Adam Leitman Bailey, commercial real estate attorney, and Paul Puryear, director of real estate research at Raymond James. Paul, what's your outlook for 2011? Are REITs going to be a real place for investors to focus?
Yes, we think so. We think 2011 will be another pretty good year. The sector is very cyclical, and as we look at the history over the last 20 years, there's been two 7-year up cycles, and during those up cycles, REITs have returned about 20% a year. So we're 2 years into this, the third up cycle. We're probably going to return, if you count this year, 25% for the first 2 years. We don't think we're going to keep up with that pace, but we're looking for 10 to 15% this year.
I'm going to play the devil's advocate here, Adam, because we've had historically low rates this year, and yet we've still seen a lot of building owners not being able to make their mortgage payments. If interest rates keep on rising as they have been, is this going to be a big headwind for the sector next year?
Yes, I agree. If interest rates keep rising, there's less money to buy properties. We're already, the best kept secret on Wall Street is how very few owners are able to pay their loans. There's thousands of modifications going on and very few foreclosures. Eventually, the ball's going to drop, but we got to dig out of this hole. So cash is king. Anyone with cash is going to do well. So REITs could do very well, but overall, the market is trash.
So, Adam, how does that affect your outlook here? I mean, you would basically, I'm assuming here, stay clear of the entire sector?
Well, no, not at all. This could be the greatest buying opportunity in the history of commercial real estate.
If you have cash, right?
If you have cash. I mean, you can't get a loan. The owners can't pay their loans. So there's a lot of deals to be scooped up, just no one can afford them.
Well, Paul, would you want to counter what Adam's been saying there?
No, we agree with that. We think that finally the mortgage market is starting to reconcile itself, and we're hoping to see some properties come back to the market. Cap rates have been going down, values have been going up. The REITs just can't buy anything. So I think the REITs, they're very well capitalized. We've been through that the last 2 years. The credit markets are open to the REITs. The equity markets are open. If you think all the way back to the early 90s, coming out of that downturn, it was a great period for REITs. This is not going to be as good. I think there's going to be a pretty good buying opportunity, but I think the banks have done a little better job managing the debt this time, but we're hoping to see some properties come back to the market.
You know, Adam, let me ask you, is this a play at all on when you look at the housing market overall and you see all the weakness there, and there's a perception that we'll see continued weakness over the course of the next year? I'm talking individual homes. Is this, by buying into REITs, a play on the idea that people will continue renting, that there's some opportunity there? You know, Diana mentioned a few picks, one of which was a student housing company, something that we've heard people talk about as a potential area. I mean, how do you look at this if you don't believe the housing market is going to actually see upside?
That's a good point. The housing market, people can't afford to buy homes, therefore they're going to have to rent. Everyone needs a place to live. So if you can't afford to buy a home, you're going to be forced to rent. Rent should do well. But the office market is doing horrible. Vacancy rates at all-time highs. That's where there's a problem. The banks need to sell their loans. They're not foreclosing. They need to do it, and eventually the ball's going to drop, and there's going to be problems in that market. But as far as apartments, we need a place to live.
Paul, real quick, considering that asset prices are still relatively cheap, would you say that next year is going to be a great year for REITs to make some acquisition opportunities?
I don't think it's going to be a great year. I think it's going to be a better year than 2010. We're starting to see the acquisition market open up. Lodging in particular, it's pretty active right now, but you know, there will be some good investment opportunities, but I don't know if great is the right word, but there's going to be some properties come back because of the foreclosure, certainly. Not great, but better. It's all relative, isn't it?
We'll take it.
Yeah.
Better is good. Thank you very much, Adam and Paul.